Welcome to our deep dive into the fundamentals of futures trading, with a specific focus on one of the most popular contracts, the E-mini S&P 500 Futures, or ES. If you're looking to understand what futures are and how to trade the S&P 500 index, you're in the right place. Let's begin by defining futures. A futures contract is simply an agreement to buy or sell an asset at a predetermined price on a specified date in the future. They are standardized and traded on exchanges. When dealing with futures, keep in mind the expiration date, which is when the contract settles, and the underlying asset, which is what the contract represents. For ES, that asset is the S&P 500 index. Now, let's focus on the E-mini S&P 500 Futures, commonly known by its ticker symbol, ES. This is one of the most traded futures contracts globally. The S&P 500 index acts as the underlying asset for the ES futures contract. This index reflects the performance of 500 leading publicly traded companies in the U.S. Traders use ES futures for two main reasons: hedging, to protect against market moves, and speculation, to profit from anticipated price changes in the S&P 500. To accommodate different capital levels, futures exchanges offer two primary contract sizes for the S&P 500, the E-mini and the Micro E-mini. The E-mini ES contract is the standard. The Micro E-mini, or MES, is a smaller version, making futures trading more accessible for smaller accounts or new traders. Crucially, the Micro MES contract is exactly 1/10 the size of the standard E-mini ES contract. This difference drastically affects margin requirements and overall risk exposure. Understanding lots, tick values, and pricing mechanics is vital for futures traders to accurately calculate profits and losses. In futures, a lot simply refers to one contract. Whether you trade ES or MES, you are trading one contract, which represents a specific unit of the underlying asset. The smallest price movement is called a quote tick. For the E-mini ES, one tick is 0.25 index points, valued at $12.50. However, since we usually discuss full points, 1 point movement is 4 ticks, or $50 for ES, and $5 for MES. This 10-to-1 ratio applies to potential profit and loss. For every full point the S&P 500 index moves, you gain or lose $50 on one ES contract, or $5 on one MES contract. Successful futures trading relies on analyzing price movements using technical analysis. Let's look at the basic tools applied to the ES contract. The most fundamental concept is identifying support and resistance levels. Support is a price level where buying interest is strong, and resistance is where selling pressure dominates. Indicators like moving averages help smooth out price action to identify the underlying trend, making it easier to determine the direction of the S&P 500. Using charts with these tools allows traders to identify prevailing trends and pinpoint optimal entry and exit points for their ES trades. We've covered the core concepts of futures trading, focusing specifically on the ES and MES contracts. It's time for a quick summary. Remember, ES tracks the S&P 500, MES is 1/10 the size, and technical analysis helps guide your trading decisions. Always remember that futures trading involves significant risk and is not suitable for all investors. Ensure you practice robust risk management and understand the leverage involved.